So we've learned about holding and ordering costs. So holding costs, what are they? How do we calculate? It is calculated on an average. Then we see ordering cost per order. Then the concept of what are stock out costs, running out of inventory. So um, loss can occur on account of non-availability of material. So these three things we've looked into. Understood about how to calculate reorder levels, the reorder quantity, which is also called as economic order quantity. Then economic batch quantity. Then we understood about how the material stock taking is taken. That is the verification of how much is the closing stock in the stores department. What are the number of what is the number of units of material which is there in the stores department. Also, um, so we've learned about what are the types of verifying what is the stock which is present. After that, then we've understood about what are the inventory valuation methods, how this is actually valued. So what we'll do is let's pick up the questions from the exam kit, um, and then see how do we solve that. So here on the screen, question number 152. An organization's inventory at 1st July is 15 units at $3 each. The following movements occur. 3rd July, 5 units are sold. 8th July, 10 units are bought. And 12th July, 8 units are sold. What would be the closing inventory valuation at 31st July using the FIFO method of the inventory valuation? So let's copy this one. So question number 152, let's work it out. So the suggestion is that we use FIFO method. What would be the closing inventory valuation at 31st July using the FIFO method of inventory valuation? So now, at the beginning of the period, that is 1st July, they had 15 units on hand, and each of these units cost $3. Then apart from that, uh, there is a sale transaction. Sale took place on 2 dates, and then they also bought additional material on 8th July to the extent of 10 units. So this has to be accounted. So if we are following FIFO method, then in that case, according to FIFO method, what is the value of the closing inventory? So that is what has to be done. So initially they have 50 units at $3 each. Done. After that, they sold 5 units. So 15, these 5 units would be, because there's only one lot of material which is available. From 15, 5 are sold. So how much more would they have? They would have 10. So all 10 of them are, no, then again another 10 units are bought. So on hand, they have 20 units, but at different rates. The first one, we have it as 15 at 10 at the rate of 3. The second one, the second 10 is at the rate of 3.5. Then when this 12th July transaction of 8 units are sold, now this is at $4 each. So if the question has what is the value of the units that are sold, then we just have to account for that the value. But otherwise, if they are sold, what is the cost of goods which is sold is what has to be taken into consideration. Inventory is always valued at the cost price. So we have to find out what is the closing inventory valuation as at the end of the period. So that is what has to be done. So I'll just show you the method, date. Then we see that see on the first date, they have that is 1st July. Ten units are there, 15 units are there on hand. This is opening balance. Next date is 3rd July. What was the transaction? The transaction was about sale. So how many units did they sell? They sold 5 units. So what's the balance of units which are there? See, from the first lot of 15 units, 5 are sold, so the balance remaining is 10. Then the next transaction, what happened was, that was on 8th July. So on 8th July, they purchased again 10 units. Then, so the total value, the total balance after this is they have 20. Of course, these are at different rates. Then we see that the next transaction is 12th July. So 12th July also there is a sale. But now, very specifically look into this one. If 12th July there is a sale, see the previous one, 3rd July when there was a sale, there was only one lot of material which was present, that is 15 units at the rate of 3. But now for the sale which happens on 12th July, there are 2 lots of material. We see one lot of material at the rate of, this will be at the rate of 3. The second lot of material, then we see the second lot of material is at the rate of 3.5. So now what is the next 12th July, there is a sale of 8 units. So the sale of 8 units will be taken from at the rate of 3. So 8 units are sold. So when 8 units are sold, they will be deducted from total 20 units. Okay. Then the balance is, we see that the balance will be written as, from the 10 units lot 8 are sold, 2 units, then we see the 10 units. So what's the value? 2 into 3 is equal to 6. The next one, 10 into 3.5. Just add them up. The total value of ending inventory is 41. This is a simplified version of how it is presented. But if a question asks us to prepare the source ledger account, we will see what is that. But otherwise, the logic is whatever comes in first, first in, first out, whatever comes in first has to be issued out first. So that is the logic based on which we have worked it out. Then let's work out questions on LIFO and weighted average method. Then I'll make you do the EOQ problems also. Because there's no question on LIFO. Fine, doesn't matter. We will first right now. Um, is someone saying something? Are you saying something? Anyone? Question number 151 is about weighted average. 151 question number. You form values inventory using the weighted average cost method. As 1st October 2008, there were 60 units in inventory valued at 12 each. On 8th October, 40 units were purchased for 15 each, and a further 50 units were purchased for $18 each on 14th October. On 21st October, 75 units were sold for 1,200. What was the value of closing inventory on 31st October 2008? So we'll work out all three methods. All three methods for this set of data. So a stores ledger is account has to be prepared. So what are the columns we would have? Question number 151. If a stores ledger account has to be prepared, we would have a date column, Then the details, the transaction details should be there. Um, Next, we see that the first three columns, the set of three columns is about, we either call it as receipts or we call it as purchases, anything, because the material would be received by the stores department. So either we call it as receipts or we call it as purchases. Then the second set of transactions, that is three columns, are, we call that to be as issued to the production department, or they are sold, either of it. Then the final last three columns are balance. So each of these three columns have three sub columns, which will be the number of units, the rate, and the amount. The first date we see is your firm values using weighted average method on 1st October. So October 1. What's the transaction? There were 60 units in inventory value. So this is the opening balance. So how many units were there on hand? They had 60 units. Each of these 60 units is valued at 12. So the total value of that is equal to, this is what we have. Then the next transaction which took place was on 8th October. So 8th October, what was the transaction? The transaction was about purchases. So they purchased how many units? They purchased 40 units. The value of this is equal to, now can we directly go to the balance column and then add them up? So that is the issue here. Altogether, the opening balance had 60 units. Now a fresh 40 units are purchased. So altogether, the quantity wise, they have 100 units. But these units are at different rates. They are acquired at different rates. That is, the opening balance is valued at $12 per unit, and the new purchase is valued at $15 per unit. So if that is the case, then how do we value that? We have to value the inventory. The same set of data, we will be using it for LIFO, FIFO, and weighted average. So I'm just copying in and pasting it here so that I will use the same format and then work it out. Let's start with the first one. Of course, they have asked it only for weighted average, but then we are also using it for FIFO, then LIFO, and weighted average. We do not add them up. Now, first we are following FIFO method. So first we don't add them up, but then we just write that separately. The next transaction after 8th October, the next transaction we see that is on 8th October, 40 units were purchased for 15 and a further 50 units were purchased for 18 on 14th October. So now this time, 14th October, we again see that there is a purchases, and this purchases is for 50 units at the rate of 18. On 21st October, 75 units were sold for 1,200. So let's write the transaction for the sale transaction which happened on 21st October. So let's make an entry for this one. If sale is happening, altogether 75. But do we have one lot of 75? We have 60 units one lot, 40 units one lot, and 50 units one lot. This is FIFO method. So whatever comes in first will be issued out first. So out of now when the sale is for 75, then the all 75 units, since they are not present in one lot, so whatever is the first lot should be taken into consideration for accounting. So we would see that it is 60 units at the rate of 12 and the amount is 720. But how many more is required? Then we see that another 15 are required. 15, are they present in the second lot? Yes, they are present. So the second lot has 40. So this will be 15. So 15 15s are 75. Done. What is the balance which is available? The first lot is completely consumed. The second lot out of 40, 15 are consumed. So only 25 would be there. And the value is 15. The last lot, which is 50 units untouched, 50 units into 15, and the value is not 15, 18, sorry. 18 and the value is 900. So that's the balance which is available according to FIFO method. Now, what's the total value of closing stock as on? The value of is equal to Now there are two lots. That is, one is 25 units. Value is 375. So 375 plus 900. So that gives us 1275. Let's check the LIFO method. If the LIFO method is followed, see, on the date of sale, on the date of sale, total 75 units are sold, but whatever has come in last, the last transaction is 50 units. So these 50 units will be taken out for sale. So the cost of those units which are sold is this one. Next, but altogether 75. So 50 are accounted from the last lot. 25 will be taken from the before that lot, that is, which is on 8th October. So another 25 units at the rate of 15. What is available? First 60 units is available. Then the next one, we see that out of 40, 25 are issued, 15 is there. So 15 is still available, so it's 75. So the value of closing stock is equal to is equal to 720 plus 75, which is equal to 795. The next one is
Ma'am,
weighted average. So how do we account for weighted average?
ma'am,
Yeah.
ma'am, in that LIFO method, the total answer is 945, ma'am. The value of closing stock will be 945, ma'am.
Where did I make a mistake? Just highlight.
Ma'am, the last line that 15 into 15, it will be 225, ma'am,
Sorry, sorry,
not 75, ma'am.
sorry. 225. So somewhere I made a mistake here also. 225. Thank you. This is 225. Total value is 945. Now, in case of weighted average method, there is no need to have a rate column under balance column, but then we see that the transactions for opening balance is the same. Then purchases are made. So the purchases are already 40 and 50. So altogether here 100 are there. And then we can just directly add it up about 720 plus 600. Add it up. 720 plus 600. Write the value. Then again, the next transaction is for 14th October. So 14th October. There's again a purchase. Purchase is for 50 units. 50 units and the value is at the rate of 80. The 1200. The total number of units which are present are 150. The 2520. As on the this time it is 75 units. At what rate would it be issued? The average rate will be taken. Average rate is all the units which are 150 units. The total value of all the units is 2520. So 2520 divided by 150 gives us the average rate 16.8. So at the rate of 16.8, the value will be accounted for. Just check that whether I've done it correctly. Okay. So the number of units sold are 75. 75 of them will be valued at a rate of 14.8. But how did we get that? See, the total value of all the 150 units is 2220. So per unit, how much would it be? 2220 divided by 150 units. So we got that to be as 14.8. So 75 units valued at 14.8 gives us 1110, the rest of it. So how, out of 150, if 75 are sold, the balance of 75 would be here. So 75 also will be valued at the same 14.8, and then the value of closing stock will be at 2210. Sorry, sir, this is 1110, not 2210, 1110. 75 units has a value of 1100. So the balance of 75 units also will have 1110. Right? So value of closing inventory is 1110. I just took one example and then we have solved all the three methods: stores ledger account according to FIFO, according to LIFO, and the other one is weighted average. We will work out questions on economic order quantity because that is also what we learned yesterday. So let's take it up. Question number 156, it says that data relating to a particular stored item are as follows. We have average daily usage, maximum daily usage, minimum daily usage, lead time for replenishment of inventory, order quantity is 8,000 units. What is the reorder level that avoids inventory stock out? So when yesterday we understood this concept that from zero number of units till the maximum units, first time when the material is um, purchased and it is stored or stocked in the storage department, as they keep issuing to the production department, when it decreases, at some point they arrive at the reorder level. So when it comes to this level, they place an order, reorder point or reorder level. So there is a formula for reorder level. Let's quickly look into the PPT. Whatever is the um, maximum consumption, what is the maximum lead time? Maximum lead time into the maximum consumption. So take these two things and then multiply to find out what is reorder level. So let's calculate what is reorder level. Reorder level is equal to maximum usage into maximum lead time. So what's the maximum usage? We have maximum usage as 520 units. Then the lead time. Lead time is lead time for again restocking the material, that is minimum of 10 days, maximum of 15 days. So we have to take the maximum of 15 days. Just take that one. So we have it here. Maximum usage is 520 units into the maximum lead time is 15 days. Just check that how much is it. That's 7,800 units. Question number 157 on the screen. A large store selling office furniture stocks a popular chair for which the following information is available. Annual demand is given, maximum inventory is given, minimum inventory, lead time, reorder quantity. What's the average inventory level? There is a formula for average inventory level. Please make a note of it. See the minimum stock, whatever is the minimum stock plus the reorder quantity, which they would be placing again divided by 2. So we have the reorder quantity as 100 shades. Minimum quantity is 20 shades. So the answer is the minimum stock, we have it as reorder quantity is 100 divided by 2. This is 70 chairs. Okay, so we'll take up the following information applies to the next three questions. Point uses the economic order quantity model to establish the reorder quantity for raw material Y. The company holds no buffer inventory. Information relating to raw material Y is as follows. We have annual usage as 48,000 units, then purchase price is 80 per unit, ordering cost is given 120 per order, annual holding cost is 10% of the purchase price. What is the EOQ for raw material Y? So let's write what's the formula. Question number 165. See 165 on the screen. Um, EOQ is equal to, the formula is square root of, we have the numerator is 2. See, the variables what they are used is different, so I'm just mentioning that 2, the demand which is given as D, and the ordering cost which is given as CO. Okay, so there are the total demand and the ordering cost in the numerator. Let me show you the formula so that, because I cannot put the square symbol here and then write it. I'm just showing you. I'm just writing it in the form of a equation. 2 into D is the demand, annual demand, and CO is the ordering cost. Divided by, in the denominator, we have CH. CH is cost of holding the inventory. So 2D, demand, CO is ordering cost, divided by, we have C, holding cost, CH. So let's present this one, square root of 2 into, what's the demand? The annual demand, annual usage is 48,000 into cost of ordering is 120 per order. The denominator we have the annual holding cost. What is annual holding cost? It's given as a percentage on the purchase price. So purchase price is 80, on the this value of 80, it is 10%. Calculate and tell me. You can do it much. Is it mathematical or statistical? Square.
1,200, ma'am.
You got it?
Yes, ma'am.
Okay. 2 into 48,000 into 1 divided. 1,200 is the answer. So 1,200 units is EOQ. That's for question number 165. Then come to question number 166. What is the total annual cost of purchasing, ordering, and holding inventory of raw materials? So basically, there would be three costs. One is to purchase all the material which is required for the entire year. So the cost, the demand is there. The purchase price is also given to us. So we would spend, we would calculate the cost. After that, we have the ordering cost. How many ever orders are placed? That many number of orders into the ordering cost per order. Next, we have the holding cost. Holding cost for the total year. Let's calculate that and then find out. Three sets of costs. First one is cost of purchasing. Cost of purchasing would be, the demand is 48,000. They have to purchase all 48,000 units at the rate of 80 per unit. So check this out. Next we have the next one is ordering cost. How many orders will be placed? See, at one time, what is the EOQ indicates? In EOQ is the value of the number of units when placed, it becomes economical. So every time when they purchase, they should purchase as 1200 per lot. So whenever they place an order, the order should be for 1200 units. Altogether in a year, if they require 48,000, how many orders will be placed? So that is the point. The next part of it is cost of ordering. We have the cost given. Ordering cost is every time there is an order placed, it will be 120 per order. But then how many orders? That's the important thing. So cost of ordering will be, if in a year they have, there is a requirement 48,000, and every time they purchase, they would be purchasing only 1,200 units. So how many orders will they place? So 48,000 divided by 1,200. That will be the number of orders. Each order valued at a cost of 120. $4,800. Next, we have the cost of holding. So they would be purchasing, every time they purchase, they would be purchasing 1,200. So in holding cost is always calculated as an average. That is beginning, which is 0 plus 1,200 every time they purchase. So maximum what they would be storing in the storage department will be for 1,200. So it holding cost should always be on an average. So 1,200 divided by 2. So that is the average inventory. On this average inventory, then we apply what is the rate. Cost of holding the inventory is given as a percentage of purchase price. So here it is, the purchase price is 80 into the percentage is 10%. Add it up.
Option A, ma'am.
What happened? Sorry, I didn't get you. Please repeat.
Yeah, I said option A.
A. Okay. Is my voice clear or is it breaking?
Clear, ma'am, it's clear.
Okay. Then we have question number 167. 167 says the supplier has offered point discount of a discount of 1% on the purchase price if each order placed is for 2000 units. What is the total annual saving to point of accepting this offer? See, when it is calculated that the EOQ is 1200, so it indicates that if they purchase it in the quantity of 1200 per order, it is economical. But here, now there is another offer. What is the offer? The offer is, if at all, if they purchase it as 2000 units, one lot. So every time they purchase it, they would be purchasing in lots of 2000. So when 2000 units are purchased, they can avail a discount of 1%. So they will actually have to spend only the cost of purchasing will be at the rate of 99% of the total cost of the material. See question number 167. Cost of purchasing is 48,000 into 80, but will they pay the entire amount? No, they will pay a discounted value because 1% is discount, so the rest of it only will be paid, which is 99%. Only 99% of the total value will be paid. In that case, here it is. Next, the ordering cost. Now this time the orders are not 1200, the orders will be 2000. Then cost of holding the inventory instead of 1200, now it would be 2000 into 80. Is 80 the price which is applicable? 80 is not the price which is applicable because they will also get a discount of 99, 1% discount, so they will pay only 99% of that. We got it as so 38,000, 381,000. What is the total annual saving? Sorry, saving. The cost if see when the orders are placed as 1200, this is the cost. Now this is the cost of placing 2000 units. Here we see 38, 384, 9600. Here it is 3812. So there is a cost saving. So cost saving is equal to The cost saving is 37,200. Okay. Let's proceed further. We spend quite some time on material and then touched upon that. There are many more exercise questions which are there. You please take it up and then solve that and practice these questions. So to have a idea about what do we have under this, we have worked it out. Let's move forward and then go to the next topic, which is accounting for labor. The next element of cost is labor. Then how do we calculate what is the cost of labor? What parameters are there? What are the items which are taken into consideration? What costs are incurred? And how do we calculate the total cost of labor? How do we account for that? So let's see what items do we have? What are the concepts which are covered here? Now, this cost of labor, what is this cost? The cost which is paid to the labor for converting the raw material into finished goods, or they are the ones who are involved in production process, and the remuneration which is paid to them. What is the method of paying the remuneration? The method of paying the remuneration is they can be paid based on the amount of time, the number of hours which they spend in the factory premises. For all those hours which they spend, whatever is the rate per hour, they are paid according to that. Sometimes, let's say, if in a day they have to be present there in the production work for 8 hours, so their wages is also calculated according to the 8 hours of work, 8 hours into the rate per hour. Then sometimes the work demands that they are there in the factory premises for more number of hours. Sometimes some situations wherein they have to quickly complete the work or take up additional work, or some situations which is not on a permanent basis, but sometimes suddenly certain situations arise. So they work extra time apart from the regular work. So whenever they stay back for longer hours, extra time, overtime is paid at a higher rate. Otherwise, normally whatever is the basic rate per hour, that is taken, but the overtime hours worked are paid at premium value. Normally, we see that the premium value is 1.5 times, so 1.5 times whatever is the regular pay, basic pay. So if they are paid 10 rupees, for overtime, they would be paid 10 into 1.5, which comes out to be 50. If normally that is that. But they may also have some other different things also. But whatever it is, overtime is always paid at a premium value. Then, if the wages are calculated based on the number of pieces which they manufacture, piece work schemes. So piecework schemes, we see total wages is equal to number of units completed, how many ever number of units which they complete, into agreed rate per unit. Okay. So total wages is equal to all the units which they produce. Now here it is not dependent on the number of hours they spend. As many number of units they produce, for these units at the rate of whatever is the agreed rate, at that rate their wages are calculated. Sometimes we see that apart from these methods, that is time based or piece based, we see that they are also paid at a combined concept. That is, they are paid minimum amount according to the number of hours present. Oh, apart from that, they also are paid for the number of units produced. So combination model could be there. Other schemes like annual salary is there, plus um, taking up the production. So there is some bonus also which is given to them. Incentive schemes, incentives are given if there is a target set, if they accomplish the target. So they are paid as individuals, or if they are working in a group, the entire group is entitled to receiving this incentive. So incentives are paid either individually or group wise. Like yesterday, we have discussed that direct labor also can be labor cost can be direct labor or indirect labor. So the examples of direct labor, all basic pay, overtime premium on specific job at customer's request. So that is identified with the job. Therefore, it is a direct cost. Indirect costs are general overtime premiums, bonus payments, idle time, sick pay, time spent on indirect jobs. So, how do we calculate it per unit of the product? That these are not possible to be calculated. But overtime is very specific to that job. So, for taking up that job, how much is the OT which is paid, overtime which is paid? So, on that note, it is a direct cost, but otherwise, in general, if any time overtime premiums are paid or bonus is paid, idle time facility provision is given to them. That is, they are present in the factory. They are not involved in production. Unproductive time, maybe rest time, leisure time. They have to take a break and then go for drinking water or use the toilets and all those things. See, there is no productive work carried on, but yet they are paid wages. That's unproductive time, but yet wages are paid because they are entitled to receive the wages for the number of hours they spend in the factory premises. So idle time, the cost of idle time is also an indirect cost, sick pay, time spent on indirect jobs. Okay. Then there are, apart from the workers who are directly involved in conversion of raw material into finished goods, we see that certain other employees are also there, or workers are also there, like cleaning staff or people who are working in maintenance, repair work. So many people who are working in the power plant, they are there to render services to the production department, but they are not directly involved in production activity. They are involved in providing services to the production department. So cleaning, and then any quality inspections, then repairs, assembly work, people who are involved in moving the material from one place to another place. All of them are there working in the factory. The maintenance staff, supervisors, canteen, welfare, people in power plants. All of them, they come under cleaning staff. They are also paid wages, but because their salaries or the wages are not identified with the production, they are called as indirect labor. Now, how do we account for labor? So labor, the total cost of labor which is paid, labor account debtor to bank, debit what comes in, credit what goes out. On account of labor, the amount which goes out. So this is accounted for. What are the things which is accounted for? Okay, we see that the cost which is incurred, the labor cost is accounted as uh, WIP is work in progress or work in process. Then the production overheads, list of production overheads which are incurred, all of them are accounted, and that is how the labor account is prepared. There is a concept of turnover. What does it mean by turnover? See, whenever the employees are appointed, if they so that's the count of people who are involved or people who are employed. Then, if there is a change in the number of employees, the change could be on account of, see, sometimes it's very specifically that the change is on account of replacement. It could be more number of workers are appointed. Maybe the work has increased, therefore more number of workers are appointed. So additions, replacements, sometimes the workers are laid off, that is they are fired from their jobs, and then they quit, that they resign. All those things also will cause some change in the employment. So there are methods which are taken into consideration. Some of them may quickly restrict it to replacements. If they are replaced, if one worker leaves, another worker replaces. So if the average number of employees is 100%, the changes which take place is what percentage? Too much of or a very high percentage of change should not happen. If the change happens, the cost of labor also increases. Why? Because the workers, when they are appointed, when they are placed in their jobs, they are provided some amount of training. So when training cost is incurred and very frequently the workers keep changing, again and again training cost has to be provided. The new employees cannot adjust to the work condition immediately, and they are not as effective as already working workers. So already who are there in the job, their efficiency would be definitely higher than the new employees who join. So we see that that will increase the cost. So number of leavers who require replacement divided by average number of employees into 100. If average number of employees is 100%, so the ones who leave the job, what is that percentage? So in general, you should remember one point. What is the percentage of labor turnover? So remember that. If it is a high ratio, if the ratio is high, it is not advisable. See, then again, we have to focus on what is the labor turnover ratio depending on what is the industry. It is not it is always that it should be low. See, certain industries like software and all, we see very high turnover ratio because of the technical advancement, the change which takes place in the organization, the job opportunities which are available. We generally see that the turnover ratios are quite high. So if we talk about a conventional roles like teaching faculty or there or so people who join in schools and colleges and universities, they do not change work so frequently. So there are certain professions, doctors, nurses, we do not see them changing their job very frequently. Conventional jobs, the turnover ratio is relatively low, but industries like software technology, we see that the turnover ratio is high. So we cannot take it based on some percentage, but we just have to refer to which industry do the workers belong and what is going on in that particular industry. So on an average, what is the turnover ratio in that particular industry? Compare it with that. So whenever you see that, first you have to remember what type of industry, what is the accepted amount of labor turnover ratio, is it right for them? So that way you have to take up the analysis. Apart from the turnover ratio, labor turnover ratio, we also have few other ratios which are calculated, which is labor efficiency ratio. Efficiency ratio talks about when are they efficient? They are efficient when they take less amount of time, because it's all about labor cost. Labor cost is dependent on the labor time, the time which they take. So the efficiency ratio is calculated based on, see, when some standard is set, let's say that a piece of work should be completed in 10 hours. Okay, then how much time is taken by them? Okay, then we calculate it. We calculate what is the efficiency ratio by a formula: standard hours per actual output divided by actual hours worked um, into 100. So we are comparing the actual hours which are worked against the standard hours, the standard which is decided, and then convert it into a percentage. The capacity ratio, labor capacity ratio is actual hours worked to produce output divided by budgeted hours. So if the budgeted hours, there are set number of hours which are decided, how many hours did they consume? So that is the capacity ratio. Production volume ratio. See, the standard hours there is a comparison between the budgeted hours, but later on the budgeted hours are revised. Let's say if the budgeted hours are decided for 1000 units of production. Okay. But when they actually produced 1200, the number of hours decided are for producing 1000 units. The actual activity took place at 1200 units. So they have to revise that. So standard hours are adjusted according to the actual output. So we have the production volume ratio which is adjusted according to the actual output. So remember these ratios. Um, Later on, when we take up the variance analysis, we will also study about what are these things. At that time, you can understand that. The next chapter, what we have is accounting for overheads. Of course, there are certain numerical questions in labor also. I do not know how much time it requires for us to finish the syllabus. As soon as we finish the syllabus, we still have major topics which are still remaining. After overhead, there are cost methods of costing. There, I have to spend time on working out the questions. So, if we finish it off in this 20 hours time, if we finish off the syllabus, some more time is available. Maybe we will test one or two questions in the labor chapter. Otherwise, we are moving ahead. We'll go to the next topic, which is accounting for overheads. So, in simple terms, what are overheads? Any one of you, you can either answer it or write it in the chat box. What are overheads? Based on the identifiability, costs are classified as direct costs and indirect costs. All indirect costs are called as overheads. Did we do that or not? What happened? No response. Am I audible? Am I audible?
Yes, ma'am.
To answer me, no. Overheads are, all indirect costs are called as overheads. Once we'll quickly refer to the cost card or cost sheet. Please look at this cost card. We see when the costs are accounted. All direct costs are first accounted: direct material, direct labor, direct expenses. So they are identified with a product. So they are accumulated, they are accounted here as what is the cost of direct material. Material cost which is identified with the product. Labor cost identified with the product, expenses identified with the product. So they are all accounted. Then comes, after the prime cost is accounted, then comes the overheads which are to be incurred. What is overhead? Overhead is an indirect expense. Indirect expense, in simple terms, we can present it as a cost which is incurred as a joint cost or a combined cost. See, we cannot know how much of it is incurred for this particular product. Yesterday, one basic example we were looking into, and then we took that a piece of furniture when it is made, material like um, this paint, varnish, those things, the cost is not known per piece. So per product, what is the cost which is incurred? They do not understand that. Then what should they do? They have to divide and distribute. Examples of what overheads are incurred at the factory level for production. So what are they? We see that factory rent is one item. So factory rent is incurred for all the products which are produced in the factory premises. It could be product A, B, C, D. Let's say that. If there are 4 products which are produced, the factory rent cost should be divided and distributed to product A, product B, product C, product D. Okay, some basis of apportionment will be taken and then that is divided. If supervisors are supervising all these 4 products, supervisor's salary should be divided. Like that, we have a list of items. Many number of items are there under factory. We see rent, supervisor salary, cleaning staff salary, people who are working in the canteen, their salaries, canteen expenses. canteen expenses, welfare charges, heating, lighting, power, maintenance, repairs, coal, gas, water, fuel. The list is a big list. Many number of items are incurred under the production overheads category. So what has to be done? Individually, each one of them have to be divided and distributed because it's not identified. It is incurred as a common cost. So all the products which are produced will be which are using the electricity costs. Then, depending on the usage of electricity or usage of power, the number of units of power which is consumed, the total cost of power will be divided and distributed. That should be done. Then we see administration, selling and distribution also. Similarly, we have a list of items. So if this is the case, so under fixed production overheads, the overheads category, we will be charging all the overheads which are incurred under factory. So if there are 10 number of items, 10 times the division should take place. Okay. In that case, it's a time-taking process. Accounting for all the overheads is a time-taking process. So let's see what does absorption costing mean. So there are few steps which are given. The steps mentioned are, we'll see what does it mean by overhead absorption rate, OAR. This is what we have to learn under this part. Step number 1. Allocation. Allocation is charging of overheads directly to specific departments where they can be identified directly with the cost center or cost unit. If they can be identified, so they are divided and distributed. Okay. 4 products are there, 4 supervisors are there. So each supervisor, 1 supervisor is there for 1 product. So supervisor salary is directly allocated to each of the products. By nature, supervisor salary is an overhead cost. So let's say 1 person is there to manage all 4, then 1 person's salary will be divided and distributed. But in case, in certain situations, each product there is 1 supervisor. What do? We directly allocate that. Okay. So in case if we can know what are the overheads which are incurred by each department, they are directly charging that. We call that as allocation. But if that is not known, we have to divide it based on some basis of apportionment or some basis is taken and the amount is divided and distributed. That term is called as apportionment. If it cannot be known, it is called as apportionment. Step number 2. It says that there are service department costs and production. In case of production, so we were talking about in case of direct labor chapter, we have learned that. So those people who are involved in producing the product, the wages which are paid, we call it as direct labor. There are workers working in works which are not, which is not production activity. Then they are also paid wages, but their wages is called as indirect labor. So here what we see is there are 2 different types of departments. One is production department, another one is the service department. So production department, the work carried on is to produce the products. Simple conversion of raw material to finished goods. There are certain other departments which are there which render services to the production department. Like we have seen the examples: supervision work, repairs, maintenance, power, then welfare center, then assembly. These are all examples what we can quote. So they are also involved in some work, but there the cost which is incurred by these departments is not directly connected to the production activity. They are involved in the factory premises only, the work which is carried on in the factory, but direct work of converting raw material into finished goods. They are not involved in that type of work. They are there as rendering services to production department. If the production department is involved in producing the products, service departments help the production department in taking up this activity of producing the products. If power department is there, what do? They supply power to the production department. So they are also involved in production, but not directly involved in converting raw material to finished goods. So they are rendering services to production department. What do canteen department? What does they do? They also provide whatever are the canteen related services to the factory employees involved in producing the product. So certain departments are there to render services to production departments. So the category of departments are production departments and service departments. Step number 3. Costs within production cost centers are charged to a cost unit. What is cost unit? The cost of a product or service is cost unit. So when we have to identify all the costs which are incurred in the factory with the cost unit, that is a product or service, then what should we do is we have to bring down all the cost and identify them with the cost unit. Cost within production cost centers are charged to a cost unit using overhead absorption rate. So how do we charge these overheads? Using an overhead absorption rate. See, if there are, let's say that two products are produced in a factory, X and Y. Initially, when the costs are incurred, see the production related costs. So product X produced in the production department 1. So they incur some cost. Product Y also incurs some cost. Later on, certain other departments, when they are incurring some services, that is, let's put this one as departments X and Y. These are production departments producing product A and product B. Let's see that. These are production departments producing the products. Then we see that service departments are also there. They also incur some services, assembly, inspection, material movement, repairs, maintenance. These are all services which are rendered. So each of these service departments, let's say service departments are A and B. So initially we see that the costs are incurred according to departments. Fine. Then ultimately everything should be brought to the production department. So A's cost should be charged to the production departments. Cost of incurred in B also should be identified with the production department. So the total cost is now identified only with the production department. Then it becomes possible for us to calculate what is cost per unit. So for that situation of charging all the costs of service departments to production department, we calculate what is overhead absorption rate. Overhead absorption rate is equal to budgeted overheads by budgeted level of activity. In fact, actually, there is a sudden deviation here. I will separate it and explain to you. In case of overheads, remember this part of it carefully. I'm explaining this because the presentation is not appropriately given. This part of overhead absorption rate is used in case of preparing the cost card. So we will again revisit the cost card. So overhead absorption rate is equal to, there is a formula which is given. And later on we are talking about under or over absorption rate. Under or over absorption. So this is a slight deviation. So we will get into that part of it, clarify that, and then come back to accounting for overheads. So I initially took you to the cost card. Since this is a time-taking process, time-consuming process about dividing all the items of overhead cost to the products. See, if there are 10 items, 10 times they have to divide and distribute. So what is done in the conventional method of costing? Conventional thing is they do not divide all n number of items, individually divide them and distribute it, individually take up the apportion method, but rather what they do, what is their practice is all the overheads, all of them under factory overheads category, they calculate an overhead absorption rate in just one single step. They finish calculating the total amount of factory overheads. Let's say that there are 10 items. So how many minimum calculations should be there? 10 calculations should be there. 10 divide and distribute. The usage of it should be taken and distribute. Then again under administration also we have some items. Then again under selling and distribution also we have items. So the conventional method of preparing cost card or cost sheet is instead of taking up every item by item, dividing and distributing, in one simple step, they calculate the total amount of factory overhead. Did you do cost sheet in your college, not in this program? Did you do cost sheet earlier in your college? Both the colleges, you have to please answer. Did you prepare cost sheet, cost statement, what is called? Just say yes or no. Did you prepare cost sheet? No one's listening to me.
No, ma'am.
No, no, okay, done. Um, this is from which college? No, it's from which college?
From St. Joseph Trichy,
St.
ma'am.
Joseph. Okay. You're in the second semester, isn't it?
Yes, ma'am.
And what about Garden City? Anyone from Garden City, please respond. You don't know, you're not aware, you have not done something, some answer, give me no. Okay. Assuming they also have not done. So you will be learning this method of preparing cost sheets. So this is the condensed form, it is prepared. So instead of doing the calculation 10 times, one simple calculation, it's called as a predetermined overhead rate or overhead absorption rate. So how do we do that? We will see that later on. If time permits, we will take it up. But some assumptions are made. One rate is calculated, and in one single step that is finished off, and it's simply accounted. So they would not be accounting as what is the actual amount of overhead incurred. So the total actual amount of overhead will be incurred, but they are not dividing that and distributing, but they are assuming a rate, overhead absorption rate, and calculating the amount based on that assumption and recording. So that may not be equal to what is the actual incurred. The amount which is charged to all the products, when you add it up, compare it with the actual overhead, actually spent overhead. When it is compared, the calculated value and the actual amount incurred, when there is a difference, that is on account of under absorption or over absorption. They record less amount than what is spent. It is called under absorption. They record more amount than what is spent. That is called as over absorption. See here, while presenting it, they slightly mixed both the things. So first you understand that. That is, they calculate the overhead absorption rate, the total overheads, budgeted overheads divided by budgeted level of activity, rate per activity. Then that is taken and the actual usage. There they apply it and then calculate that. That is overhead absorbed. Compare it with the actual amount which is incurred. That is the actual overheads incurred. Compare it with the absorbed overheads or charged overheads. If there is a difference, it is on account of under absorption or over absorption. So in case of overheads, there is a production overhead account which is prepared. The total cost of overheads which are incurred, how much ever is charged, production absorbed. See, based on the overhead absorption rate, whatever is the amount which is charged. If it is less than what is incurred, it is under absorption. If it is, let's say here it is 120, it is over absorption by 3. So production overhead account is to be prepared to check whether there is under absorption or over absorption. Okay, for this one also, if time permits, I will work out questions from overhead accounting. But from chapter 8 onwards, so whatever are the chapters we have, we will work out questions from the examination paper. Every topic, at least one small bit, at least we will take it up and work out. The rest of them you can learn it in your college. So you will be learning, whichever college or university you're studying in, you will have a paper called as cost accounting. And in cost accounting, you will study in detail about what is the cost card or a cost statement. Then you will learn about in detail about materials, then labor, then overheads. After that, we have methods of costing. So we have in our syllabus, what are the methods of costing? The first one is about absorption and marginal costing. So we will be looking into that. Then job order costing. Then process costing. Okay. After process costing, we will learn about service and operating costing. Then activity-based costing, only the basics I will explain about activity-based costing. Then certain other theories which are there for in manufacturing environment, that is TQM and others are there. Then this is statistical part of it. We have to learn about forecasting techniques to prepare budgets. Okay, budgets have to be learned. After budgets, we have the variance analysis also would be there. Then the financial aspect of whether or not to invest in a project. Then variance analysis or standard costing is there. Performance measurement. Basics only we will learn about performance measurement. What are the other non-financial parameters? Okay. So after today, we will have 7 days. So 7 days and the syllabus is kind of vast. Okay, for 7 days, if we have to fit in, it is not a very simple task, but nevertheless we have to do. So wherever it is needed that we have to work out a numerical question, we will be looking at that. So chapter 8 now. Absorption costing and marginal costing. So what is the difference between these two costing systems? So you people have not done cost accounting, and but I'm trying to highlight on what is the difference between absorption costing and marginal costing. You get a doubt, you please stop me. I'm assuming that you are able to follow and I'm proceeding further. But anything is not clear, please raise your hand or ask on the mic directly also you can ask, and then I'll stop and I'll explain. In simple terms, See, when the point of difference comes at, you must have done your trading account, trading P&L account, or some basic idea you must be having about your trading account. What do we have? Of course, we have all that in values. So we see that we have opening stock. Then we have the details about the production, all the costs which are incurred for production. So the production costs are all accounted, like labor cost is paid. Then we see rent, um, so many listed out, that is lighting, heating, coal, gas, water, fuel, all that, whatever is incurred for producing. So the production part of it. So these two together, we see, if we take it as number of units, these are the units which are present. The number of units which are present, we have it as opening stock plus the units produced. So in trading account, we will write what is the value of opening stock, what is the value of production, cost of production. The list of items will be recorded, but we understand what is the total cost of production. Out of the total available units, a part of the units are sold. So what do we have? We have it as sales. Sales value is easy to find out. The number of units which are sold at the selling price per unit. So sales is there. Done. Now comes on the credit side, those units which are not sold. So these are the total beginning units, then additional produced units. These are total available units, and the cost is also accounted. Out of that, the units which are sold, the value of sales is also known because selling price per unit is known to us. Then comes, we have to write what is the closing stock. Anywhere you don't understand, please stop me. Then we have to write what is the value of closing stock. So those unsold units, the unsold units have to be accounted. Of course, in case of number of number of units, we know. But how much should the value be charged to those closing stock units? Is it that simple that we can just straight away write what is the value of closing stock? See, when opening stock is from the previous period, the value is brought down to this current period. We know value of opening stock, number of units of opening stock, that is known. How many units are produced is known. All the costs which are incurred is also known. So the value of production is known. The number of units produced is also known. So debit side, two items, we have a clarity. Coming to the credit side. How many units are sold? Units we know. At what price are they sold? The sales value also we know. So what is that we do not know? What is that we do not know is what is the value of unsold units, which is closing stock. Done? So we can talk about, maybe we can write proportionately what is the cost. At this point of time, we see that there are two different methods which opine differently, which have a different point of view as to what cost should be charged to these closing units, closing inventory, closing stock. What should be the value which should be charged? Costs are broadly incurred in production activity. We see costs are incurred for the production activity and non-production activity. Non-production activities, administration, selling and distribution. So we are only focusing on the production part of it because closing stock is at the production level. So we see costs are also incurred at non-production. Then the costs which are incurred in production and non-production are broadly classified as variable cost and fixed cost. Variable production cost, fixed production cost. Fine. So what should we do in case of valuing the closing stock? Absorption costing is very clear about what should be charged. See, we see what is the total cost of production for all the number of units proportionately without making a distinction between whether it is variable cost or fixed cost, without considering any difference. Take the total cost. Absorption costing is the other name for this one is total costing or full costing, full cost method. So they don't make a distinction between variable manufacturing cost or fixed manufacturing cost. They just take both the values and then proportionately calculate the cost and charge it to closing stock. So whatever is the production cost, the total production cost, proportionately, see for the total number of units which are available, okay, the total cost is taken and proportionately which is charged to the closing inventory. Okay, that will go to the next period at that value. But the difference, the point of difference is with what is done under marginal costing. Marginal costing technique is a technique which identifies the cost separately as variable cost and fixed cost. We see profit, we see that sales, the regular equation of earning profit is sales minus total cost is equal to profit. All of us know this is very, very basic equation. Sales minus total cost is equal to profit. Done. But marginal costing suggests that since fixed cost, yesterday also we looked into, fixed cost remains fixed. It does not change. When it does not change, any decision which is taken, there will be no effect on fixed cost because it doesn't change at all. So what does it marginal costing suggest is, to before we find out what is profit, this total cost has to be split into two parts, the variable and the fixed. So it suggests that first the variable cost has to be deducted. So sales minus variable cost. At later point, even the fixed cost is deducted. And then we see what is the profit. But the point of difference here between these two equations is, first when sales minus variable cost is deducted, the resultant figure is called as a term which is called as contribution. So contribution is called as profit, but that is controllable profit because only variable cost can be controlled, not fixed cost. So controllable profit, from controllable profit, fixed cost is deducted. So the resultant figure is profit. This profit and this profit are same. There's no difference. But the way in which they are presented, there is a difference. That is, first variable cost is deducted, contribution and fixed cost. So marginal costing at the time of valuing the closing inventory, it considers only the variable production cost and charges the cost of variable production cost to the ending inventory closing stock. It ignores the fixed production cost. It does not charge fixed production cost proportionately to the closing stock. I hope I made it clear, but still once again, let's see the major point of difference. Of course, there are other things which we have to look into that. But the major point of difference in absorption costing and marginal costing is, when the ending inventory has to be valued, at what cost do we account the closing inventory is the point here. So absorption costing suggests that whatever are the total production costs, proportionately charge one portion to the ending inventory. Let's say that total units available are 1000 units. Out of that, For 1000 units, 50,000 is spent. Ending inventory is 100. So for 100, how much should be the cost? As simple as that. There is no categorization, differentiation, specialization, all that is not there. Proportionately, they charge a portion of the total cost to the ending inventory. Simple, logical. But marginal costing or variable costing, what we also call it as. It says that because fixed cost is fixed in nature, it should not be considered for anything. For decision making, that should not be considered. Only the variable production cost should be charged to the ending inventory. So this ending inventory is valued at the variable production cost. So the same value is taken to the next period as opening stock. So opening and closing inventories are valued at marginal. Marginal is variable. The term marginal and variable are same. Marginal production cost. That is the main difference between absorption costing and marginal costing. Am I clear? You have to tell me that. Anyone has a doubt in this point, please raise the doubt so we can address that. Then only I will be able to talk about the other differences. This is the major difference. In case of absorption costing, proportionately the total cost is charged to ending inventory closing stock. But under marginal costing or variable costing, the other term is variable costing, only the variable production cost or marginal production cost is charged to ending inventory. Okay. So assuming it is clear, I do not know whether it is clear or not. Assuming it is clear, we are moving ahead. So if proportionately it is charged, so we see that this closing stock has both the items variable cost and the fixed cost. Under absorption costing, closing stock value is definitely higher in case of absorption costing. In case of marginal costing, only the variable cost is there. Okay, so closing stock goes to the next year, isn't it? Closing stock is a cost which is a treatment, is it should be deducted from the cost. So we are writing it on the credit side. So when the closing stock is higher, the result here will be profit also will be higher. The credit side is higher, profit also is higher. So under absorption costing, profit is higher. Why? Because closing stock is valued at a higher value. Why is it valued at a higher value than the marginal costing? They do not differentiate between variable and fixed cost. Both of them are taken. So we see that on account of the closing stock is higher, so profit is also higher than the marginal costing. So coming to the marginal costing. So in case of trading account, if we write, we have the opening stock, then we have the production, then sales, and the closing stock. So closing stock will have only the we have only the variable. So when lesser cost is charged to the closing stock, it will also result in less amount of profit. We see that the profit is also less. Proportionately fixed cost is not charged. The complete amount of fixed cost, whatever is incurred, that entire fixed cost is deducted here. No portion is charged to that it will carry to the next period. So fixed production overheads are carried forward from one period, because a portion of fixed cost is also charged to closing stock. It will be carried to the next period. It goes on like that. But here no fixed cost is charged. So nothing is charged to the closing stock. Only the variable component is charged. So the fixed component completely is deducted here only. No charging of fixed cost to the closing stock. So the profits would be lesser. Fixed cost charged in full cost against profit in which in the period in which they are incurred. fixed cost is proportionately charged, it will be carried to the next period. So charge against profits when units are sold. What is the profit statement? The profit statement, this is the format. Under absorption costing, sales minus cost of goods sold. All the costs are taken. Any adjustment for under over absorption, gross profit. Here, they make a distinction between marginal cost is variable cost. Clearly, marginal cost is deducted. Then the variable non-production costs are deducted. All variable costs, contribution, less fixed cost. Both the production fixed cost, non-production fixed costs are deducted. These are the formats. So the impact on increase in inventory level, absorption costing has higher profit. This is higher profit. This gives lower profit. Impact of decrease in inventory levels. Less inventory levels, less number of units. So we see that less amount is charged to the closing stock, so less will be the profit. Here, if the number of units are less, so those few units, we see that variable cost is charged. Very less value is there on the impact of decrease in inventory levels. Inventory level is reducing. Then also why lower higher profit? When inventory level is constant, it would be same profit under both the systems. If there are less number of units in closing stock, we see that less amount of cost is charged here, less amount of cost. Then we see that the profit also will decrease here under absorption costing. Here, if the number of units are less, okay, for those lesser number of units, the variable cost is charged. This also, so relatively we see that in either case, it should be lower profit only in marginal costing. Okay, if both the inventory levels are same, it is the same profit under both the systems. Fine. On this note, we'll stop. Okay, we will further continue with the explanation about advantages under both the systems. At least one numerical question I'll make you work out in tomorrow's class. After we work out the point of difference between marginal costing and absorption costing, then we'll move to batch costing and process costing. Okay, so we'll take it up tomorrow. Tomorrow's class we'll meet again and then work out one question on absorption and marginal costing. Okay, I hope it is all clear. If it is not, you can ask now or tomorrow also. Okay, anyway, tomorrow we will again continue with that. If you feel that there is something which is not clear, you want to ask a doubt, you can ask it tomorrow also, and then we'll continue tomorrow. Okay, shall I end the class here?
Sure, ma'am.
Okay, good day then.